Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra, and with me today is Ekta Batra. Ekta, good afternoon, and what a start to the week, right? We have been gaining strength, and that is something that is coming from a strong handover that we got from global markets as well. The Nifty has continued its momentum. It's up around 0.7%. So good going.
Absolutely, Sonal. Hi, afternoon, and moving towards that 18,000 mark. So let's see whether we get to that level or not. Just want to point out one particular stock, Zydus Life Sciences. That stock should probably come up for you. They have got approval for a particular drug which is used for mental conditions. It's an antipsychotic drug. That stock is up around 0.5% off the day's high, but nonetheless, they have shared exclusivity on this particular drug. So hence, it should probably aid in the future. It is still on patent for a couple of years, so that's why you're probably not going to see any kind of earnings estimate added on in the near term, but nonetheless the stock is higher by around 0.6%. These are top stories this afternoon. Stocks continue to rally on led by IT services and realty, while utilities and FMCG lag. Midcaps outperform.
PVR and Inox leisure gain after the weekend release of Brahmastra surprises at the box office despite mixed reviews, but the slim release calendar in September remains a worry.
Hindustan Aeronautics moves higher after Antique initiates a buy on the stock with a target of 3140 per share. This brokerage says with a robust revenue visibility and a strong order book, the company shows multi-year double-digit earnings growth potential.
And Nazara Technologies gains on Google Play, allowing distribution of fantasy sports via its platform. Company tells CNBC TV18 skill-based gaming has a large opportunity in India.
Well, those are all of the top stories that we're tracking at this hour. The mid-cap index is up around 0.8%. So let's talk a little more about the technicals, about broader market stocks. We have Himanshu Gupta of Globe Capital joining in to tell us what he's tracking this afternoon. Himanshu, hi, welcome to the show. We've started off the week on a positive note. There's strength in the markets, follow-on buying, which is taking place after that 2% gain that we saw last week. Tell us, what are you strategizing?
Hi, very good afternoon to you. Well, clearly every dip during the market hours has been bought into from last couple of days, and today also, if we saw after the open, we saw a slight dip, especially in the financials and the Nifty Bank, but it was sooner bought, and I think which is very encouraging to see. The intraday derivatives data is again turning out to be very positive. And as far as levels are concerned, I think Nifty is headed towards 18,100, 120, which is likely to act as an immediate area of supply. So for somebody who is already holding on to Nifty long positions, I would recommend to hold with a stop loss below 17,880. For somebody who wants to initiate longs, I think the stop loss, one can initiate longs around 920, 930 zone, and the stop loss below 17,880 would be recommended there as well. Nifty Bank, again, after the initial dip, very strong rebound, very strong comeback, and I think it's the charts and the derivatives data is suggesting that 40,900, 41,000 is the level which can be expected by tomorrow. For intraday, I think the stop loss below 40,450 on the spot can be recommended. So both the indices, the data and the setup continue to remain strong, and buy on dip is something that I would be advocating.
Oh yes, buy on dips. That's something that our market has continuously seen, right? Himanshu, in a case like that, what would your individual technical picks be?
Yeah, so in today's session, we have seen a clear-cut breakout in all the chemical stocks. So I think the focus should be on the chemical stocks. And from this space, I have two stocks, one from F&O, one from cash. So SRF is the first stock that I would be recommending to go long. The stock has been consolidating for a while, and today we have seen a fresh breakout in this stock. So SRF can be bought for a target price of 2,800 for the short-term targets. Stop loss below 2680 can be placed. And another buy from this segment, from the cash segment, is DCW. This is again a stock that has been showing some kind of accumulation and very strong strength over the last couple of weeks. And I think the charts are suggesting that a fresh breakout from these levels can be seen here as well. So DCW is a buy for a target price of 58 in the immediate short term. While from a positional perspective, I would expect that stock to rally towards 60, 62 levels also. Stop loss below 51 can be placed here. And finally, another mid-cap idea is Godrej Agrovet. We have seen a strong breakout into this session with strong volumes. I think this can be bought around current levels with a stop loss below 535, and target of 580, 600 can be seen in a day or two.
Okay. All right, Himanshu, we're going to leave it on that note. Thanks very much for joining in and giving us all of those calls in terms of stocks. Just want to point out a couple of stocks which are under pressure today. So just watch out for Indiabulls Housing Finance. That stock is down around 3.5%. Remember, it's lost almost 40% in terms of its market cap this year itself. So seeing a little bit more of pressure in today's trading session. But let's move on. We have Sonia standing by at the wall with her mid-cap movers, which she's tracking this afternoon. Sonia, over to you.
Well, thanks a lot for that. So let me start with the 52-week highs because there's so much traction in the market today. The hotel space, the travel space doing exceptionally well. Lemon Tree Hotels, Indian Hotels at fresh 52-week highs, followed by Apollo Tyres, Naveen Fluorine, as well as specialty restaurants has been looking pretty good. In fact, real estate is a space that has been doing exceptionally well today. Oberoi Realty, Kolte Patil, Arvind Smart Spaces, Brigade Enterprises all sitting at fresh 52-week highs and also gains of anywhere between 3 to 4%. Prestige Estates told us the demand is very strong, especially in the residential space, and they expect FY23 to be much better than FY22. Let's move on to the specialty chemical space. I spoke about how Naveen Fluorine is sitting at fresh highs. It has for company SRF, Deepak Nitrite, which are up about 3 to 6.5%, and big volume gain buzzers is what you're seeing over here. And coming to the losers, you spoke about Indiabulls Housing Finance. That stock is down about 3.5%. You have Coffee Day as well, that's down almost about 2%, but few and far between on the losing end. Back to you.
Oh yes, that's the case. Sonia, thank you so much for joining us with all those details. Specialty chemicals, definitely a tailwind since their energy prices in Europe is impacting the big chemical companies in that region, something that we have highlighted. So that is something that is working for these stocks this time around. But we do have an update on Container Corp and IDBI Bank strategic sale. Let's go across to Sapna Das for more details on the same. Sapna, what are you picking up?
Hi. So post the cabinet nod to the railway lease license fee, we're given to understand that probably in the third quarter of the current fiscal, that is basically any time between October to December, the government could be in a position to actually finally invite the UIs for Concor. We are aware of the fact that because the LLF issue had been held up for almost 2 long years, the Concor stake sale could not go ahead. The preliminary information memorandum could not be made public. But the government is very closely wrapped up on this, so they're just waiting for the railway notification to come out. Once that happens, I think over the next 3 to 4 odd months, the OIs should be out in public. That's one. Second, also in terms of IDBI Bank, it's very close now when the OIs will be invited. Even the current month still is not ruled out yet. Maybe in the last week of September, if not early October. On that front also, we are given to understand that, this entire issue about holding on to some residual stake, we're given to understand that 60% is what will be offloaded by LIC and government put together. So around 35% they'll be holding on together. But on that front also, the government is very clear. They are not interested in any kind of a board representation in IDBI Bank post the stake sale also. Probably that will also apply for LIC, though they have their own concerns in terms of bank assurance and furthering that in the market. But government is only looking at the upside. So the examples that are being given are, say, for example, HRL. Here also they hold 29.5% stake, but no board representation. I think that's the same strategy they led off for IDBI Bank going forward, and it will be a complete giving over of the management control. These are the two updates we have as of now.
Okay, all right, Sapna. Thanks very much for bringing us those important details. Welcome back. Well, it's steady for the market, so let's get talking to a couple of companies then. Shalby is one company which is in focus. The hospital is possibly eyeing key acquisitions in markets such as Delhi and Kolkata to cater more to the influx of international patients and the possibility of them growing from Bangladesh as well as Nepal. Shanay Shah, who's the president of Shalby, joins in to discuss this in detail. Shanay, hi, welcome to the show. This is Ekta. If you could start by just telling us about what the plans is when it comes to acquisitions. You all are looking at markets such as Delhi and therapies which are not core to you all, which is basically orthopedics. 40% of your revenue is from there. So you're looking to diversify. Tell us your plans and tell us how exactly are you probably going to even fund these acquisitions.
Sure. Good afternoon, Ekta. Thank you for having me here. I think you're right. We are looking at Delhi and Calcutta as potential markets for us. The reason why we are looking out at the moment is because, we had an internal benchmark of reaching a certain level of ROCEs, after our listing, until we kind of go for further acquisitions. And, at the moment we are at about 16 to 18% ROCE for the hospital business. And that is the reason we are looking out now for potential acquisitions that can be value accretive to the group. These markets, as you correctly mentioned, drain a lot of medical tourism from across the SAARC region, as well as Delhi is very well connected to many other countries as well. So we do believe that these will add these will be good strategic fitments for the group. With regards to the focus on orthopedics, yes, so Delhi and Calcutta will be multi-speciality hospitals, which is what we've been doing for the last several years. The new business model that we've come out with is the franchisee model. And through the franchisee model, we will kind of establish standalone orthopedics centers of excellence, which are 30 to 40 bed in not only metros, but tier 1, tier 2, tier 3 towns as well. And here we'll be focusing on the entire orthopedic specialty, which is knee and hip replacement, spine surgeries, trauma, arthroscopic surgeries, and emergency care.
So, Shanay, what would the size of this acquisition be? You have around 125 crore rupees in your books. And since we are talking about international medical tourism picking up, how much has it improved for you, say, versus COVID levels? Is it back to pre-COVID levels?
Yeah, we are sitting on more than 200 crores of investments as we talk today. Of course, we have a certain amount of debt, which is why the net cash is slightly on the lower side. Having said that, international medical tourism has been picking up significantly, after January. So January we had the Omicron wave, because of which, I think, a lot of people would not travel during that quarter. But I think from Q1 onwards, we've started seeing a huge jump from the international markets, including Nepal, Bangladesh, as well as the East African countries like Kenya, Tanzania, Uganda, etc.
Okay, so traditionally,
and what we also see is that we are expecting over the next 5 years, we'll be seeing a 15 to 20% growth year on year, for the international medical tourism market. Now it's up to the hospital operators to see how much they can make out of this opportunity.
Okay, so 15 to 20% growth is what you're expecting, at least in the international patients market. So that's a strong growth expected. But Shanay, if you could just dwell a little further, because generally you all have been quite positive on this whole franchisee model of CapEx, and that's what you've been focusing on. Is that changing now? Are you going to have a mix of franchise and acquisitions, or do you think that acquisitions is probably the way to go, where you probably have more management control, whereas you don't have that as much in a franchisee model?
Yeah, so the way we would look at it is we would be now operating, Shelby would be operating 3 major verticals. One is the traditional multi-speciality hospital business, where we will be expanding, which are all multi-speciality hospitals, 200 to 250 beds each. We run 10 of those. We will be adding 2, which is Mumbai and Nashik soon. And Delhi and Calcutta, of course, is in the radar. So this would be one of the segments. The second segment would be the implant business that we know of, that we operate from California. So that is the second business vertical. And the third business vertical will be the franchisee business, which is going to be only orthopedic focused. And these will be smaller standalone hospitals, as we discussed. And these will be on an asset-light model. So you're right, this is going to be asset-light for us. We already have 2 franchisees operational in Udaipur and Ahmedabad, and we are going to start Lucknow in next month. And by the end of this year, we will be starting Gwalior, Rajkot, as well as Kanpur.
Okay, so Shanay, in these 2 segments, I'm not talking about the traditional business. Let's say talk about implants business. You did 26 crores of revenues in Q1, eyeing 100 crores in FY23. What is the long-term growth that you're expecting here? Also in the franchisee model, it is asset-light, but in that case, what kind of growth do you expect in this particular segment?
See, for the implant business, we are very, very bullish. In fact, the way we see things is, in the next 5 to 6 years, we have a target of reaching about 600 to 700 crores in the medical implant business. And the primary growth drivers there would be the the US business as well as the Indian market and some of the Southeast Asian countries. And we have built an ecosystem around, building this business, and a lot of resources in terms of time as well as capital are being pumped into this business. This company that we acquired has been traditionally doing business. So it has been a 27-year-old company and is very well established in the US and Japan market. So it is going to be slightly easier for us to penetrate those markets. India, we have a lot of captive consumption as well, but the idea is to really kind of promote these implants to other hospitals and doctors within the country as well. So we believe the potential is huge in this business. Coming to the franchisee business, we genuinely believe that the growth potential there is significant, but I will not talk about the numbers on the franchisee business because these are still early days. So I think over the next 6 to 12 months, we'll be in a much better position to give numbers and outlook on that business.
Okay, it's interesting, Shanay, because you're looking at a brick and mortar business really, which is in a way parallel to what you do, which is basically the implants business, whereas all of your peers are looking to get into the services part of the hospital space, which is basically ancillary services such as diagnostics, home care. That is something that doesn't interest you, say getting into something such as diagnostics, even home care, or any other parallel service to the hospital?
See, we believe that, we want to focus on our strengths, and our strength is orthopedics, where we are globally the #1 player in orthopedics. So, with the run rate that we are going in, we'll be doing between 14 to 15,000 knee and hip replacements this year. The next highest globally is done by Hospital for Special Surgery or maybe Rothschild in the US, and they do about 1/3 the number that we are doing. So that is the kind of advantage we are at this point of time. So how do we make the most out of it? So we see two ways. One is the franchising business, where the potential is massive in terms of the opportunity that we're sitting on in India in tier 1, tier 2, tier 3 towns. Where we can capitalize on all the 5 segments that I mentioned within the orthopedics business. So that is something which can be a huge number over the next 3 to 5 years. And the second one is the implant business, where the internal captive consumption is huge. There are huge supply chain issues which are there in the market right now, which the top 5 companies, top 6 companies are facing. The idea is how we can leverage on that and create a market in it for ourselves. Where we have a captive consumption, we have a brand to leverage on, and at the same time, the implant business is likely to grow at 15 to 20% for the next 8 to 10 years. So, it is slightly unorthodox, but, we believe that it is going to do wonders for our group in terms of, adding up to the total revenues over the next 5 to 7 years.
Okay. All right, Shanay, thank you so much for joining us and giving us all those details. So that's the word coming in from Shalby, very bullish on the implants business, can do around 600 to 700 crores in terms of revenues in coming years. The stock is higher by 0.8% as we speak. Hi, welcome back. You're still tuned into Midcap Radar on CNBC TV 18, and this is our special segment, Midcap Spotlight. Vaishta is focusing on key fundamentals of what's working in the paper sector, and they are buzzing on the back of multiple tailwinds. Vaishta.
Hi Sonal, thanks for that. Well, paper stocks have been in spotlight for quite some time now. So let's see what has led to this growth. Number one reason has been the ban on the single-use plastics, which was announced sometime around in July. So the paper is actually replacing plastic in multiple forms of packaging, which is a structural tailwind for the entire industry. Next is on the supply constraints, where the pulp prices are high due to the geopolitical issues that we know of. Multiple paper mills in Europe are actually closing down due to the energy crisis which the country is facing as a whole, and hence the prices are up, the demand is up and the supply is down. Next is on the price hikes. So there are multiple price hikes which have been taken by paper companies in the past few quarters, whose impact is being seen in the company's net sales realizations. And on the national education policy, where this policy is expected to provide some boost to the writing and printing paper segment as a whole. Now the paper industry, as we know, is quite fragmented and has stiff competition from the larger players, and henceforth the prices are also quite volatile. Now amidst this, the backward integrated players are expected to benefit, which means that the companies which have a higher level of raw material integration in their operations. So stocks like West Coast, JK Paper, Andhra Paper, Tamil Nadu Newsprint and Papers have run up in excess of 50% actually in the past 6 months.
Okay, all right, Pahishta. Thanks very much for that. Definitely, it's a lot of these paper stocks which have gained over 100% on a year-to-date basis. So it's not just about today that we're talking, but it's just been a phenomenal run for the likes of West Coast, Andhra Paper, JK Paper, all of them gaining over 100% on a year-to-date basis. In fact, let's listen into a conversation that we had with Pawan Khaitan, the Vice Chairman and Managing Director of Quantum Paper. We spoke to him earlier in the day. Listen in to what he had to say about the industry.
Prices clearly have shown an increasing trend in the last quarter as well as the current quarter. They are in that region of 15 rupees a kilo price rise, and ours are better than others because of our market orientation. Us compared to our competitors, we are more market oriented, where most of our product goes into the market applications, printers, publishers, a wide variety of applications paper is sold for. Net realization would be close to about 95,000 rupees per ton. Going forward, I look at EBITDA margins touching close to 30%, closer to that than the 22% that we've already achieved. This quarter, we are seeing quite a substantial rise because of increased price lines.
Okay, that's all about the paper sector. Fundamentals looking really strong with higher prices as well. And with that, we have completely run out of time on this edition of Midcap Radar. Stay tuned inside out when we return.